What if the greatest investor of our time started with nothing more than curiosity, patience, and a paper route? Warren Buffett has quietly shaped how millions of people think about money, risk, and long-term thinking. Known as the Oracle of Omaha, his story stretches across nearly a century, not of flashy deals or dramatic risks, but of disciplined decisions, small advantages compounded over decades, and an almost unnatural ability to stay rational when others lose their heads. This is the real story behind the legend. Warren Edward Buffett was born in 1930 in Omaha, Nebraska, to Howard and Layla Buffett. From an early age, he displayed an extraordinary fascination with numbers and business. He could add large columns of figures in his head faster than most adults could with pencil and paper. Friends recall a boy who seemed destined for the world of finance. There's a famous childhood story. Young Warren reportedly told a friend that if he wasn't a millionaire by age 30, he would jump off the tallest building in Omaha. Thankfully, he never had to test that promise. At just 11 years old, Warren made his first investment. He purchased 3 shares of City Service preferred stock for $38 each. The price soon climbed to $40, and he sold for a modest profit. But the stock later soared to $200. That early sale taught him one of his most valuable lessons. Patience in investing often matters more than timing the market perfectly. By 13, Warren was already hustling. He woke up at 4:30 every morning to deliver newspapers for the Washington Post. He supplemented his income by selling magazine subscriptions and calendars to his customers. By age 15, he had saved around $2,000, roughly $26,000 in today's dollars. He invested $1,200 of that into a 40-acre farm, striking a profit-sharing deal with a local farmer. In high school, his entrepreneurial spirit grew. At 17, he and a friend bought a used pinball machine for $25 and placed it in a barber shop. The machine proved so popular that they soon owned several across Omaha, generating about $25 a week. They eventually sold the entire operation to a war veteran for $1,200. After graduating from the University of Nebraska with a Bachelor of Science degree, Warren set his sights on Harvard Business School. He was rejected. Undeterred, he turned to Columbia Business School, where he knew the legendary investor Benjamin Graham was teaching. In 1951, he earned his Master of Science in Economics. Back in Omaha, Buffett worked as a stockbroker and even taught night classes after taking a Dale Carnegie public speaking course. In 1954, he moved his family to New York to work directly under Benjamin Graham. When Graham retired in 1956 and closed the partnership, Warren returned to Omaha with significant personal savings, over $174,000, equivalent to about $1.5 million today. He bought a modest house for $31,500. Even as his wealth grew, Buffett remained famously frugal, a trait that would define his entire life. In 1956, he launched Buffett Partnership Limited with family and close friends. The terms were unusual. He asked a doctor friend to recruit 10 other doctors willing to invest $10,000 each. Warren himself started with just $100 of his own money, but reinvested his management fees to grow his stake. By 1962, those partnerships had grown to over $7 million in assets, with more than $1 million belonging to Buffett himself. At that point, he had become a millionaire. That same year, Buffett made what he would later call his worst investment ever: Berkshire Hathaway. The struggling New England textile company, founded in the 1830s, was bleeding money under poor management. After a tense dispute with leadership, Buffett began buying shares aggressively. But the textile business continued to decline. Instead of fighting a losing battle, Buffett made a pivotal decision in 1966. He gradually shifted Berkshire away from textiles and transformed it into a holding company for investments. He used Berkshire's remaining capital to purchase insurance companies. The float from those insurers, money collected from premiums before claims are paid, became powerful fuel for further acquisitions. This strategic shift marked the beginning of Berkshire Hathaway's extraordinary transformation. Today, Berkshire oversees a vast portfolio of more than 1,000 businesses with total assets exceeding $700 billion. Buffett became a billionaire in 1990 when the company issued Class A shares. His approach remained remarkably consistent. Buy wonderful businesses at reasonable prices and hold them for the long term. Beyond business, Buffett is known for his commitment to giving. One of his largest contributions was donating 185 million Berkshire shares, valued at $28.3 billion, to the Bill and Melinda Gates Foundation. He continues to live by the principle that true success is measured not just by what you accumulate, but by what you give back. Now in his 90s, Warren Buffett still lives in the same modest Omaha house he bought decades ago. He doesn't look like a corporate titan. He looks like someone's wise grandfather, unassuming, straightforward, and disarmingly honest. Yet his intellect and clarity of thought remain unmatched. His story is not one of mythical genius or overnight success. It is the story of a man who discovered his passion early, stayed relentlessly focused, and let the power of compound interest and sound judgment do the heavy lifting over a lifetime. In a world obsessed with quick riches and constant noise, Warren Buffett reminds us that patience, discipline, and intellectual honesty are still the most reliable paths to lasting wealth. What small habit or decision are you making today that could compound into something extraordinary tomorrow? If this story resonated with you, consider sharing it with someone who needs to hear it. Thanks for watching.